Hello everyone, a very good morning, good afternoon, and good evening to all of you. This is your host Vaibhav. In today's session of JForex Indicators Explained, I will be explaining to you one interesting pattern named as short line candle. And from the name itself, you can make an informed guess that this is a formation in which we are likely to see a short candle. The particular focus is on the real body of the candle. It should not have much of a difference between its opening and the closing price. Its real body should be quite short, and that's how this name is derived, the short line candle. So let us now head to the JForex 4 so that we can look at its examples on the chart and see how we can utilize this formation for figuring out the opportunities to trade in a profitable manner. To plot it, all you have to do is quick search, type in short line, or even if you type in short, you will get it. Here it is, and we are seeing another indicator added on the chart. Let me remove it. Okay, now let's see. Again, it has been added. Okay, on this chart, we don't really have it. I think there is some issue with the platform as to indicators are being added even when we opt in for the single formation. Let me see if I can remove it. Alright, now if we consider these candle bodies of these patterns recognized on the chart, you will see that in comparison to its recently volatile candle, we have these short body candles being recognized on the chart. You can see on multiple occasions we have this formation. It is going to form quite frequently. This is a recurring pattern, and from the chart you can make this assumption that after some time you will keep getting these formations whenever the underlying instrument goes into a consolidation phase. After a strong move or even in the extended period of consolidation, you will see this formation repeating multiple times. And whenever the underlying instrument is trending, in those kind of occasions we will not be seeing many short line candles being formed on the chart. As you can see on the chart, whenever the underlying instrument is trending, we get to see this long bodied candle, and as soon as it starts its consolidation phase, we come across these short line candles. And how to utilize it, that is a important question, and its use is quite simple, quite easy. This formation takes shape when we have the closing price which is closer to the opening price. There is not much of a difference, and many a times what happens after the start, the price goes on to rise, or even you can consider the inverse scenario, the bearishness. So the price goes on to rise, or for that matter, goes on to decline substantially. And in the same candle period, it reverses course and comes back to close where it started. So nearly the closing price is same as the opening price. It is fairly close to the opening price. So in those kind of situation we get this short line candle where the body, the real body, that is the difference between the opening and the closing price, is not much. And in those kind of circumstances, from this kind of price moves, you can infer that there is not much of a momentum. And if we had the prior trend bullish, that signifies that the prior bullish trend might be coming to an end, and it is better for us to now get ready for the exit or some profit booking if we have had used that trend to initiate the long trades, and if in the prior price moves there was sharp decline, and now with this short line candle formation you can make an informed assumption that the prior declining trend, prior bearish trend is now coming to an end or it is nearing its end. So it is better to go for some profit booking if not for a whole profit booking, and as we get further confirmation we can even think about closing the position. Now coming to the initiation part for the new trade, how to utilize it. For that you will have to use additional factors. Now many a times what can happen is we might see the continuation of the prior trend. So if the prior trend was bullish and then multiple short line candles form, so here we have this example. In this case there was prior upward momentum in the price move starting from 129.8 all the way 200 pips almost, and then we had this multiple short line candle formation, but the trend didn't really change. It continued this consolidation phase, and in next couple of candles the uptrend again began. So this short line candle can also be formed when the price moves are simply going sideways, it is not reversing course. So you can utilize it as a continuation formation. If we see the price action again climbing up, climbing above these consolidation highs, the short line candle highs, we can indeed look to initiate the short sale trade. So it is quite an effective mechanism to get advantage of the second leg of the price moves. So whenever we see the continuation and the possibility of the prior trend resuming again, we can look to initiate the trade. As we saw in this case, again we saw this on this occasion also, and in this case the price move didn't really change its course. It went on to rise but not much, and then after that it reversed course, and again we saw this short line candle forming here. And in this case also there is no reversal from these levels, and we see again the resumption on the lower side, but it doesn't really go much, but still it indeed generates these 40-50 pips move on the lower side. So I would suggest that you can look for continuation of the trend, and if the prior trend was strong and we get further move, further break above these short line candle high, we can indeed go for the initiation of the long trade, and same strategy can be applied in a reverse manner. So if the prior trend was strongly bearish and then we see the price breaking below the low of the short line candle, the initiation can be done for the short sell as well. So in both these occasions, we are relying this formation as a continuation pattern. It is not going to get you reversal. For reversal, you will have to use additional mechanisms. I would say that it is better to be used as a continuation formation rather than a reversal formation. As for reversal, we will need additional factors like a strong move on the reversal side. And if we see that kind of scenario, and we can then use this formation while utilizing its high or low depending on what was the formation earlier, what was the trend earlier. So we can then go for the use of these pattern, the short line candle, in a reversible fashion as well, but its common use is mostly limited to this continuation formation. Now let us see what we can do in terms of its editing. There is nothing we can do for input, so this option has been disabled. Coming to the output, we can go for different color combinations of these bracketing for the candle. So suppose if you like this orange color styling combination, you can go for that. We can go for these two different kinds of styling combinations as well. Coming to the advanced editing option, recalculate on new candle only. This is a single candle formation. So when the candle starts, if you don't really want this kind of situation where after the new candle takes shape, these earlier price moves are going to be categorized as the short line candle because the real body is going to be short in the initial period if there is no sharp move. So to avoid this, you can even go for recalculate on new candle only. Highlight the time period zone. There is a single candle formation, so this particular particular feature is not going to be much helpful. Show indicator on all the periods. Suppose if you want to have this indicator available on all the time frames, you can opt in for this, or else you can specify on which candle period you want this indicator to be available, and only on those time frames it will be available. Now that I have opted for 5 minutes and hourly, we will see this pattern recognized on the 5 minutes and hourly. But if I opt in for any other candle period, you won't see the formation. I think this is happening because we had twice selected these indicator. Now if I go back to the hourly, we will see this orange color combination, and also if I change it to other candle period, we will see that the short line candle is no longer visible on this chart, or for that matter any other candle period. Only on hourly and on the 5 minutes we will have this pattern recognized on the chart. It is taking some time. Okay, let me revert back to the hourly. So that's how this formation can be taken advantage of to get the profitable trades, whether you are looking to short or go long. In both these circumstances, this is a formation which you can reliably use as a continuation pattern to catch the second wave of the prior trend, whether it was bullish or bearish. You can continue to exploit the situation to your advantage, and whenever there is a resumption of the trend, you will be in a position to go for the new trades. So that's all from my side for today's session. If any of you have any query or any idea to share, do write to me in the feedback and I would be more than happy to take the discussion forward. Thank you all for joining in. Have a fabulous day ahead. See you next time around. Till then, goodbye.